Okay, I just wanted to follow up last week's video that I did on the 6E trade plan trade results video with a quick video to show the difference between the trailing stop P&L and the fixed target T2 target P&L. I was asked this in the room, and I wanted to figure out the best way of going about it. If you watch that video, you'll know that I mentioned that in that video. I decided the easiest and the quickest was just a quick fix. What I did is I created a T2 marker column. So all I did was inserted a row between exit name and profit. Do it wherever you want, in fairness. And I just said equals if M1 equals T2, so the exit name is T2. So the prior row's exit name, if that equals T2, then it's true, the statement's true, and if not, it's false. So you can see here this is true because the prior row's exit name is equal to true, and because the trades are sequential, and this is one trade, this is another trade, this is another trade, you always get where it's true. Basically that's the trailing stop, and T2 has been reached. So what I did then was just to make sure, I made sure that the trailing stop was filtered for and true was filtered for on that marker, and then I copied up all the data for the profit and the trade number to a different sheet. And I did a summary of this, and the first thing, actually probably should have put this the other way around, but all T2 P&L versus all trailing profit P&L, you can see that on first inspection it seems like it's just nowhere near as good. You think, well, actually that's quite a bit worse on that trailing stop, $99.87. Remember, it's $12.50 a tick, so that's 8 ticks ish versus 114.7. So it's over a tick worse. The ratio is 1.15, but what that doesn't take into account is that the markers there on the trailing stop include fixed target parts of the position which haven't reached their full target before exiting. So that's when both of the parts of the position get stopped out at the same time on the trailing stop. So when money management level 1 has been reached, it then hits that trailing stop before target 2 for the fixed part of the position, and that certainly does bring the trailing stop average down a bit, because you can see that above here, when I've used the T2 marker, the difference between the trailing stop and T2 is much less. Now, still say, well, actually that's quite a bit lower, and it's not really worth the risk, and that's something that you have to weigh up, and it depends on the type of product that you trade. Maybe the euro isn't quite as useful to trail a stop, and maybe it's better if you had 3 positions on there and you had another fixed position and trailed less of a percentage of the position. But what it does give you is, if we go to the summary chart, I've adapted this, and you can see that we still got the T2 here in green. I've put the trailing profit when T2 has been met for the fixed position in black, in the black triangle here, and then the average of T2 and the average of the trailing profit in purple and red, the purple and red lines here. And you can see actually by the end they're very, very, very close. But what you also see is on individual results, there's a lot lower results in the trailing profit being met when T2's met, but also you've got the potential for much, much, much bigger trades as well, getting on for double the size of some of the biggest fixed target 2 P&Ls there. So you can see that by trailing it does give you the ability to get those bigger wins, but you have to weigh up whether it's right for your product. But that's a good exercise to have a look at just how effective the trailing stop is when the fixed target 2 has been met for the fixed part of the position. Thanks for watching.